market's gonna crash. No, it won't. The economy's strong. Who do we listen to? The truth is, nobody's a wizard and nobody can predict the next crash. It seems like today, if you have an opinion, you can find hundreds of articles that support your same opinion. However, on the flip side, you can also find hundreds of articles that disprove your opinion. So it can be very stressful to find the correct information. Today I'm going to go over when you should expect the crash, what you can do to prepare, and what to do when the market does crash. So when will the next crash be? The answer is nobody knows, but you should not be worrying. In the past 71 years, the S&P 500, which is a collection of 500 large companies, has dropped at least 10% 38 times. Just for the record, a correction is considered a 10% decline in the market over days, weeks, or months. A stock market crash is defined as a 10% drop that happens in just one day. These crashes can then lead to a bear market, which is when the market falls for a total decline of 20% or more. Now you might be thinking, it's crashed 38 times in the past 71 years? That's terrible. But let's just go back 71 years. If you put $100 into the S&P 500 in 1950, reinvested all your dividends, then in the year 2021, you would have $212,000 just from that initial investment of $100. That is the power of compound interest. Yes, the market goes down. Yes, the market crashes, but it always comes back up. Like in those past 71 years, we went through the dot-com burst, the 2008 financial crisis, the pandemic, but markets are still higher than they were 71 years ago. This is why time in the market beats timing the market. You shouldn't be scared to invest your money because you're scared of a crash. But on the flip side, I don't believe it's wise to save up all your money and never invest just waiting for the perfect moment to invest. Oh, I have $10,000. I'm gonna wait until the stock market crashes before I buy any stock. The truth is, we don't know when the stock market's gonna crash. It could be another 10 years until you actually invest your money. But if you just put your money in the stock market, it will compound. Now, this is a graph showing the purchasing power of the United States dollars over the past 110 years. So some pretty important things have happened, like the Federal Reserve creates a central bank in 1910. Around 1930, you see Roosevelt criminalized the possession of gold, so you can see the price of the US dollar going up. But one of the most important things on this graph here is in 1970, President Nixon took the US dollar off the gold standard, meaning money is no longer backed by gold. Money is fake. It's just whatever the government says it is. With gold, you can't print an infinite amount of gold. And it leads us to today where inflation has skyrocketed, not even accounting like the stimulus checks with the recent pandemic. Like look here, in 1910, $1 could have bought you 30 Hershey chocolate bars. But today, to buy those same amount of chocolate bars, it's gonna cost you $26. You know, around 1930, for $1, you could have bought 10 rolls of toilet paper, but now it's going to cost you $15 for that same amount. That is why if you're saving money in your bank account just waiting for the next crash to happen, your dollar is going to lose value. You need to put your money into investments that make your money grow, that can beat the inflation rate. For example, if I was waiting for the stock market to crash, I wouldn't hold a bunch of money in my bank account. I would buy other assets like gold or crypto and maybe even real estate. And I would just keep a few $1,000s in my bank account. That way, if the stock market crashes, which it will, I can quickly buy stock with the cash in my bank account while I try to liquidate the gold in Bitcoin. And just because one market crashes doesn't mean that other markets will crash. So if the stock market crashes, it doesn't mean the price of gold is going to plummet or the price of Bitcoin is going to plummet. So those prices will stay around the same or maybe even go higher, to which then you could liquidate it and then invest it back into the stock market. And you can kind of play around with this with whatever market you truly believe in. Like if you held a bunch of your money in stocks, but you really enjoyed real estate, when the real estate market crashes, you could liquidate some of your stocks and put that money into real estate when it's at a discount. Because that's really all a crash is for entrepreneurs. It's just a huge discount. But what's most important is you shouldn't be stressed about a market crash, because it will happen, and historical data shows us that it always comes back up even higher than it was before. The only way that the market doesn't come back up is if America fails as a whole. And if that does happen, we have a lot bigger problems on our plates. Focus your energy into spending as much time in the market as possible and let compound interest do its thing. If you want to see more finance videos, check out these ones right here. Down below is the subscribe button. Thank you for watching. My name is Austyn Crispell. Have an amazing day. I'm out. Later.